and welcome to another exciting podcast right here at First National Ipswich's headquarters right here in Ipswich. Today we've got an exciting topic and somewhat of a scary topic. We're talking about interest rate rises and how it will affect everyday Australians just like yourself and myself. So what we've done is we've got two absolute professionals to join us today, Carrie and Helen from Mortgage Choice right here in Ipswich. Welcome.
Thanks, Lou.
Right, thank you. I asked these beautiful ladies because they're the owners and operators of Mortgage Choice Ipswich, and they know everything there is to know about interest rate rises, financing, loans, the absolute wealth of knowledge. And urge you, if you like what you see today, I'm sure you will, definitely contact the ladies because it's well worth a call. So let's talk about the scary term that's rolling around Australia at the moment, so interest rate rises. So what does it actually mean? Like, how does it affect us at the moment, do you think, Helen?
Well, interest rates have been rising. We knew they started from such a low base that they were always going to go up, I suppose. So we've had 3 interest rate rises so far. The first one was 0.25% and that was followed by 2 additional rises of 0.5%. So there's a bit of a lag between when the Reserve Bank makes those announcements and when they're actually passed on to clients and then when clients make repayments. But no doubt by now clients will have received their letters from the banks letting them know how this is starting to affect their repayments, and people may be concerned about what that means going forward over the coming months, because obviously there's plenty of media hype around where rates might be going and those wild predictions.
Mm-hmm. So I'm guessing, okay, we've had the interest rate rises, so what does it actually mean dollar-wise, do you think, for people that have got the average loan at the moment?
So on the average loan of $300,000 with a 1.5% rate increase, if we put a dollar value on that, that's about $68 a week. If your loan's $400,000, then that's about $80, $90 a week in repayments extra. The question with interest rates is how high are they going to go? Now that's not a question that we can answer, and we are expecting to get another few more rate increases this year and potentially 1 or 2 next year. But the next question is how long will they hold at that rate, and are they going to continue to go up or go down? And that's something that we'll just have to wait and see what the Reserve Bank makes their announcements going forward.
Yeah, absolutely. It is an unknown. We don't have a crystal ball. I think it's interesting, like you're saying too, with the lag time from when they actually make the changes to how it actually affects people. That's really interesting. So what can people do to try and mitigate the interest rate rises?
Yeah, I'd say I've probably got about a top 5 here for people that they should be thinking about. The first one is really, and we hear it all the time, is ask your lender for a better interest rate. We say it all the time, people have heard it anyway, but definitely ask your bank for a better interest rate. Get your broker to do that for you. They'll know which banks that your bank is pricing against to get you the best possible deal that you can. So definitely get your broker to do that hard work for you. That's number 1. Number 2 is if your bank doesn't provide you with a competitive interest rate, then you should be looking around at what other banks have got on offer, and in particular look for banks that are offering refinance rebates. This is money that other lenders will pay you to bring your business to them, and definitely helps to cover the cost of the refinance. And in many cases, well, we've got a couple of lenders in particular at the moment paying $4,000 to change your lending over. So definitely worth looking at some of those options as well. Third thing would be, we know these rises are coming. Start making extra repayments now. Even if you're on a fixed interest rate, most fixed interest rate loans will provide for some level of additional repayments without penalty. So start now having a conversation with your broker about what your repayments look like at 4%, at 4.5%, at 5%. And you don't need to jump to that now, but start making some plans to increase your monthly repayments or your fortnightly repayments now, so that when you come off those fixed interest rates, you're going to manage just fine. It's just understanding and having the knowledge to put yourself in that position now. So definitely do that. Next thing will be, if you've got an offset account, make sure you understand what that's doing and it's working in the best possible way for you. Most people are paying an annual fee for that offset facility of around about $400. Now, the offset facility is there to mitigate some of the interest charge that the bank is charging you on your loan. So if you have your lending with one bank and you have an offset account, but you have all of your other day-to-day accounts and your savings at a completely another bank, you're getting no value out of your offset accounts at all. So revisit your banking. If you've got an offset account, make sure it's working for you. It's another simple way to make sure that you're getting charged the least possible interest that you can. Definitely review your lending, chat to your broker, chat to your bank, but I would say chat to your broker. They've got more options. They must act in your best interest here, so they're not going to be looking to refinance your loan if that's not in your best interest. We've got a legal responsibility to work under best interest duty, so we'll always be looking to make sure that whatever we advise you on will be in your best interests.
Okay, that is awesome content. Absolutely. I mean, top 5. I'm making some mental notes of what I can do as well. And I know you're Ipswich based, but you've got clients all over Australia.
That's right. We can do phone interviews. We can travel in the Brisbane CBD area and beyond. It just takes a phone call to our office and then we can guide you from there. I'd also like to say that it's a great opportunity. If we're looking at the household spending, we've had a 20 or 30% in property growth over the last 12 months, 2 years, and it's a great opportunity to look at maybe doing some debt consolidation or revisiting your budget to make sure that you can wear the impact of these interest rate rises.
Yeah, excellent. Thank you so much for coming in. I've learned a lot. I know that our viewers will too. We know where you are, so it's Mortgage Choice right here in the same building here on Warwick Road. And thanks so much for coming in. It was awesome, and hopefully if people are interested, they can give you a call, or obviously, as always, if you love our podcast, and hopefully you do, like and share them. Watch them over and over again if you like, and we're only a phone call or email away. And thanks for tuning in. Thank you.
Thanks, Glenn.